Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. You can see all across the board, red, red, and more red. And I know you've probably already seen what happened in the markets, but I wanted to show you why. That's the first thing that we need to cover because you'll see the little tidbits and news headlines and this and that, but they never get into the why. And you probably already know what it is. The second thing I'm going to talk about is the bear market. Can you believe it? We are watching the NASDAQ right now in a bear market. So it just shows you the significance. And that's the theme for today's video, the significance of what we just went through in April. And then third thing is basically the commodity inflation. I'll show you some things around commodities like oil and so on, all of that and more. Let's begin. Dow tumbles more than 900 points and the NASDAQ drops 4% on Friday to close out a brutal month. So while we have been told that stocks never go down, you don't have to worry about it, buy the dip. Jim Cramer comes out and says, now's the time to get in. Kathy Wood says it's all overdone. You need to buy today. These things are never going to be known until after the fact. My goodness, come on. Nobody is able to predict. But what we do have are the activities of the central bank. Compare that with the markets, and we see a direct correlation. Looking at the next one, you will see companies like Amazon. This is just an example. Amazon shares fall 14% for the worst day since 2006. I can show you the chart itself. Looking at Amazon, I mean, we are back to the levels we haven't seen since May of 2020. Imagine erasing all the gains. You've made no gains this entire time. If it drops just a little bit further, we will go back. I'm talking just a tad, okay? We will go back to April of 2020. And if the pace continues, it won't take long to get back to February of 2020. Okay, so we will see what happens. But despite how many people ordering on Amazon, despite all the business going in that direction, e-commerce is the new thing. Look at what's going on right now with stock. Remember that a business's strength and this dominance and so on doesn't necessarily correlate to a higher or some case, a lower stock price. Things act very wacky. If the whole market is being pulled down, it's going to take good names with it. Whether, Amazon, what do you think of, Apple's a good name, whatever it might be. And when that happened, Jeff Bezos lost $13 billion in a day. $13 billion. I know that you are shedding a tear for Jeff Bezos, I'm sure, but this just gives you an actual idea of how much money is in these stocks. And when you look at a change, which happened, I mean, it shows you right here, Jeff Bezos saw $20 billion of his fortune melt away after this. Okay, so you could see his net worth falling to $148 billion. And so I'm just trying to show you that this stock, it's so massive that when you have it falling just, a single day, what happens? What happens to these individuals and their wealth? It's so concentrated inside of these stocks. Look, why is this happening? Well, it's pretty clear. Inflation is something that many people thought, if you look at what's going on, prices are rising higher. That means the prices of real estate and the prices of stocks and the prices of everything will go higher because it's inflation. But it doesn't work like that. If you take it back to the example of 1970s, inflation benefits stocks at first, but then it hurts it. You could see commodities may win throughout this period, but just as they go up, you have to watch it because when things get exaggerated, they come down real fast. Look at oil as an example. It went up to $130 a barrel and came down under $100 a barrel real quick, right? So we never really know. I'll show you oil in a few minutes, but this is just showing us the fact that the PCE, the personal consumption expenditure, the fakest of all fake inflation rates actually rose 5.2%. This is fake, of course, because number one, I've done videos about this before, but it strips out the food and energy costs. So if you take away those things that have gone crazy recently, you know, it starts to look like, well, it's 5.2%, but you know what the real deal is, okay? The true inflation. You could type in TRU inflation and you will get a good indicator. You've got shadow stats, of course, and so on. What we are seeing today, as is mentioned here, rising rates are not a good recipe for inflation and growth stocks. So these companies here that have seen all their growth from 2020 and on, suddenly inflation is going up, interest rates are going up, and that hurts stocks. This is just showing us basically how much savings people have today, and you can see that it has just taken a considerable hit. The stimulus was given out, and then, of course, as that melts away, as that's spent up, as people need to buy either things to live, their groceries, their rent, their payments, or maybe they're buying the new flat screen TV, as all that diminishes, we can see that it is directly impacting the economy because consumers really rely on debt, on the stimulus packages, and so on. We've made that very clear. I've documented that all throughout. So this is basically just showing us the PCE. When you look at these inflation rates, we go back to the levels of the 1980s. Now, let's talk about the bear market. Can you believe it? But the Nasdaq's monthly percentage change down 11.5%. Truly significant. This is set to be only the fourth month since 1973 where the S&P 500 returns were down more than 5% and treasuries down more than 2%. So there's only been a couple instances, and during the financial crisis was one of those. So it is significant. And you watch how much money has left just in this short period using the EPFR data, which I do show you regularly. This is the largest 3-week equity outflow since March of 2020. Okay, so all I'm trying to highlight here is where the money has been leaving. And you could see very clearly this is all the different markets from their peak, specifically highlighting the bottom one, which is the NASDAQ, down 22% from their peak. Isn't that extreme? Isn't that excessive? Imagine this. You look at the world equity market cap. You look at the world exchange market cap, like all different ways to measure it. We could see that these have all come down. All of them have come down overall. And that has been going on, right? It depends on which we're looking at, but essentially from that, October timeframe. It's something that I've highlighted over and over again. It was getting real rocky. Like once November hit, we knew that things were really changing. People didn't want to believe it, but here we are. Okay, and then you look at what happened over April. S&P 500, NASDAQ, Russell, so on. All of them have been hit to a degree. You look at the NASDAQ was, of course, hit a lot harder than the Dow Jones. It depends on what that index is made up of. Let's talk. Let's get into what's happening. I want to show you right now one of those stocks, or two in this example, that have seen, let's say, a big change from where they were at not that long ago. Exxon and Chevron ramp up stock buybacks as energy prices surge. Exxon triples their share buybacks to $30 billion through the end of 2023. So I'm just giving you an idea of what's been happening over this period, and you could see that as the prices have gone up, they've been able to profit from that. It's pretty obvious. Whereas, look, 2013, what happened? Exxon, biggest company in the world. There's been times where this company has been the biggest company in the world. And then oil prices go down. They went down so far that they said, we're going to take you out of the index. And now what's happening? Now the oil prices go back up, and now suddenly they're very significant again. There's always going to be something that is on the rise, something that is falling, and other things could be, sort of chopping along. Like if you look at this Amazon stock, pretty much through this entire period of July 2020, and now recently it's been taking a beating, but just up until recently, it's just been chopping, okay? And so there's ways to make money with swing trading along the way. That takes some practice, that takes some time, that takes some effort. But if you were a long holder, imagine you didn't make any cash throughout this period. But if you saw what I was talking about through 2020 into 2021, I was saying, look, commodities, it seems like they're rising. What's going to take a hit? Well, perhaps all these high flying stocks that didn't deserve to be where they were when, oh my goodness, Zoom stock is now worth more than Exxon. You remember that? I showed you those charts. Crazy. Was that ever supposed to happen? No, but there's that risk and speculation in the markets. Looking at oil right now, as of this recording, WTI at approximately 104, Brent at 109. So we have seen, despite the volatility, the prices are still truly very, very high. And that means higher prices at the gas pumps for you. This is the Bloomberg Commodity Index, taking it back, let's say a year. And you can see it's in one direction. It's straight up. And this means, broadly speaking, we have watched commodities rise. Now, if people didn't have commodities in their portfolio, they wouldn't have been able to gain from that. But it seemed like the easy play, I don't want to say that easy, but I mean, compared to, trying to pick a stock, it just seemed like commodities would be rising. And anybody who took to my, buy 7 2x4s and get rid of your 7 shares of Amazon, those individuals certainly did very well. I did speak to one just recently, actually, within the last week or so, who said, hey, I saw what was going on. I bought in. Thank you very much. So, it depends on where you're at and so on. But anyway, India asks state firms to consider buying Russian oil assets. So you can see that India and Russia, they're definitely partnering up, along with Russia and China. And of course, there's been so many different things that have been happening all in this region that looks like it could be a very different future, let's say 10 years, 20, 30 years down the road, that becomes, a whole different world, if you will. Okay. So that's it for this video. If you appreciate it, hit the thumbs up button. I really want to thank you for all of your support. Thank you all. I'll see you on the next one. Take care.